Welcome again everybody to another weekly recap of trend trading on the really high time frames where we are able to catch the biggest moves that those markets have to offer. Now let's simply have a look again at 4 different markets and see what the last couple of weeks have done and see if there was some money to be made. Now I always like to focus on the major markets with enough volume so that you really get stable, robust moves up or down that you can follow for a long time. That just ensures that the profits really can accumulate and you don't trade for a couple of pips, but rather for hundreds, if not thousands of points. Now, when we look at gold, this is something I always enjoy a lot, not because it's gold itself and because of the inherent value a lot of people put on this market, but gold and also silver as of now really are some markets that are showing the possibility of a turnaround after a 4-year correction is or has been over. It looks like we do want to pay attention to fractals or to breakout signals into the old direction of the trend, and that actually means the direction in gold and silver was up from or let's just say for decades until 2009 2010 hit this market, and you got this 4-year correction, and this could actually be over now, as this gold chart here should illustrate. Now let's first of all look at the main market direction in the past, and we are actually looking here from the year 2013 all the way to the beginning of 2016 over here, and this time period is covered by not only a market that is going down, but as you can see by these 3 different blue lines, there is divergence here, meaning prices go lower, but the momentum, the pressure with which price is going down, isn't following that direction. So that always is an indication that the trend is getting weaker and weaker and weaker, even though we don't know how many divergences there will be. If you look at those 3 lines and to the corresponding hills in the momentum indicator, you can actually see that there are 3 divergences before this market turns around. Usually, or in the textbook, you would find that you only need this 1 divergence, and if you have it, you are good to go, or you get valid signals to the other side of the market. Now over here, when you look into this area, obviously you're looking at a correction. Prices were lower at this candle, even only by a few ticks. Down here in the momentum you already get the first divergence, but if you don't have a crossing of the indicator on the or to the other side of this 0 line, then that actually means you're looking at a minor correction, and a minor correction or minor corrections happen a lot of times during a trend. What you really want to see in order for a divergent to be valid is the crossing of the 0 line, which indicates a major correction. If you get one of those, including 1 or 2 minor corrections, you are actually looking at a valid type of divergence, which would lead to going with the market in the opposite direction as you get the signals. And this is what I have marked with these black arrows here. These are all bifractals that occur after the market has given you major and minor corrections while it is trending down. We never know how far a trend goes, so we are following it for sure, but we cannot ignore the market telling us that it wants to turn. It's not just that you get these divergences, but if you actually look at the price itself, you can see that as it develops these divergences, it is gaining speed in the opposite direction. You don't only get fractals, they are actually hit in all of those cases. and you would try and buy the turnaround there. However, since we have no idea what the market is doing, what it is going to do, and what kind of news are hitting the wire, we are simply following. So if we are taken out, if the buy fractals don't work, which is the case 1, 2, 3 times here, you would simply have a stop loss in place that doesn't lose you too much money of your entire capital, and you would just keep on following the trend, trading the down fractals. So you would follow the overall market direction, assuming that your buy fractals are wrong, they didn't work, the market is not finished, creating more divergences. However, the buy fractals here don't really work, which means they get hit, but price turns around immediately, and you want to always look for a stop out right at the opposite fractal or right inside of the balance zone, which is marked by those 3 moving averages. 3 times this happens to you here. If you risk 5, 10, 15% on one trade, you are going to be broke after this is over. So trend trading has a lot to do with taking many trades that will not yield any profits, but it doesn't matter, since your actual winning trades are going to be much larger than your average losing trades, 2 or 3 times larger if you just let them go. You shouldn't have any take profit targets, and you should definitely control the only thing in trading that you really can control, and that is your risk. How much money are you going to lose? And if you adjust your risk to a level where you really don't care anymore where the market goes and if the next trade is going to be a winner, then you are in the exact space where you should be as a trader, because as soon as the signal is hit, it doesn't matter if it is a trend following signal where you want to follow the overall direction of a move, or if you trade the turnaround. If you adjust your risk to a level where you are psychologically comfortable with it, then you don't even care what the trade is doing. Now, since you want to trade, or hopefully you want to trade for the rest of your life, which could mean a decade or even more decades, who cares about each individual trade? It just doesn't matter. The performance in trend trading is accumulated over a longer period of time. Depending on your time frame, you would or it's possible that it will actually take you a year or a couple of months or half a year before you have enough trades for your edge to really play out. And when you look at the gold chart here, the first fractal is hit at the beginning of 2015, but all throughout this year this market is not yielding you any profits. You can cut your loss after the entry of the fractal if you buy it, but you would immediately try to follow the trend in the other direction. Both ways of entering here, long and short, is not really profitable in gold in 2015, simply because this market keeps on diverging. And as it does that, there is no momentum, or no true momentum, no pressure for price left in any direction. So you would lose and lose and lose, but it doesn't really matter, since you limit your losses. And since you're also trading other markets, it doesn't really matter if gold trends or if it doesn't. You would just be looking for trends in other sectors. Now, you want to keep on following every market that shows you valid breakout signals, and the same is true here in gold. Your next signal that breaks out to the upside would be this 4th arrow marking the up fractal, and after 3 fractals failed previously, you now get the working fractal. If you take that, the price is moving out. As you can see, the AO turns to the other side much more significantly than you saw it in these previous major corrections. You can actually see now that the momentum has shifted from being overall negative to maybe being overall positive. At least it has been staying above this zero line for a longer period of time, and if gold is actually able to increase its bullishness, and we have more people coming in buying gold, you will get new highs in the momentum, meaning that there's a lot of pressure or building up for prices to go higher. And as this kind of development unfolds, what you see is always the same. You will get a peak in the momentum, and then you get minor, and then you get major corrections that will eventually create these divergences, telling you that the move is gets slower and slower. However, let's not get ahead of ourselves. In gold, we are right in the process of finding out if this market is really going out to the upside much more, since we do see the momentum positive. It may actually increase, the pressure may increase as this price keeps going higher. Now, if you have traded this fractal from all the way down here, you do have a pretty rapid move to the upside. Depending on your trading system, this area might make you exit the trend. If you're really long term and you have a long holding periods, you might even still be long all the way from down here, which would be really great, since yet another fractal marked by this arrow here has been broken 3 weeks ago. So far prices have not turned into the positive, but there's no reason at all to exit gold or to exit this long in gold, since it's made a new high. It is staying above the balance zone, and we did see, the trading in 2016 definitely was accompanied by a lot of buying pressure to the upside. And now we are waiting and seeing if this continues. Now, our risk on this trade is just as small as it is on every trade. So even though we do see high possibility here due to all those divergences and this fractal having worked out well, price staying above the balance zone, as well as the momentum increasing towards the direction of the trend, and this is also where our position is in, we still don't buy more than we would on any other trade. We don't know what happens in the markets. We don't know what the world news will bring us tomorrow or even in the next 10 minutes. If you have harsh events in the world which happen from time to time, your position may take quite a hit, and you want to make sure that you stay liquid so you can play this game tomorrow. This is really what it's all about. Make sure you stay liquid, don't ever lose too much, so that when a trend comes you can you're still able to participate in that trend, and then the profits of this trend can make back all the losses, these small losses. That's how trend trading works. That's the mathematical edge that you are trying to play here. Now, that would simply mean, just like in silver, that gold will continue up from the perspective that we can take right now. Now, there is nobody who says that gold isn't going to go all the way back down into the balance zone, correcting more, maybe even giving us a major correction and then resuming up. No idea. Let's simply trade what the market tells us to. Very interesting are also the indices. Again, let's take the Dow Jones as a CFD, as a representative example here. You did get a breakout fractal being hit just 4 weeks ago, but prices rejected that level and are turning down. This last week was pretty slow at first, and Friday the last couple of hours of trading actually sent price all the way down here. It closed lower than last week's close, and we are now approaching this balance zone from the upside. So that means this huge move, which didn't see any correction internally, needs to be, or the market needs to breathe at some point, and it always does that in where it finds some equilibrium, and that would be the balance zone right here. If this continues to the upside, making new all-time highs, or going down again, that would be way too soon to tell. As the trend trader, you would try to trade the breakout, you would try to follow the market in the major direction that it goes. Right now it doesn't look like the Dow Jones does have a whole lot of a major correction. You can see this in this chart that you do get a leg heavily down, heavily up, heavily down, and now the same thing happened to the upside again. So who knows if this isn't just gonna break down again. The monthly chart really kind of underlines the overall situation in the Dow Jones after a huge move since 2009, where prices nicely stayed above the balance zone, absolutely indicating that it will continue to the upside. Also in the momentum indicator you can see only minor corrections, and this keeps prices trending to the upside, which is the perfect scenario for the trend follower. However, the last couple of months, since the middle of last year, 2015, you can see these moves on the weekly chart that are heavily down, heavily up, heavily down, heavily up, unfolding in the on the monthly chart. A scenario which is quite logic. After you have such a huge trend without any breathing, you will eventually get your major correction. The AO goes to the other side of the zero line. In an uptrend, of course, that means it goes below the zero line. In a downtrend, it goes above the zero line. And prices are just stuck in between the balance zone. This is exactly what we want to see after such a huge move. It's simply breathing now. Breakouts are not even being hit on this time frame here, and there is no real chance for trend followers to trade this until you get a new all-time high, or the old high is broken. Until then, it's going to be very dangerous to trade these indices right now, at least the US indices, since they are not in a trend. They are correcting and they don't know where they want to go. So we are talking about a range of a couple of thousand points actually. If you want to trade this, you need to go to a 1 hour or maybe a 4 hour chart, but you shouldn't expect too much robust and stable trends. It's gonna be all over the place with some really great moves, but you want to probably keep your stops tight. Now this correction is not over. As you can see, after making this huge hill to the upside in this uptrend, we are really now observing this momentum declining towards zero, and eventually it will go below zero, giving us our major correction before the continuation of this whole move will unfold. Probably not even in 2016 anymore, who knows. And so since the momentum needs to go below the zero line, it is simply an assumption, but a valid assumption at that point, that you will see prices lower. That does not mean that these fractals here, which would mark a breakout to the downside, will be hit, but at least you won't see this market be or trade too much more to the upside. And this has been shown by the last 2 months. You get a more or less a turnaround here. The momentum of this candle of this month is totally gone, it looks like, and now we are probably retracing back into the balance zone, and there is no trend in this market. Now let's have a look at the Euro US dollar. This is also a market which really requires some patience, simply because you did get this great move in the euro dollar. This is the monthly chart of it, from all the way up here, 130, around 130, to where we are now, into this zone. This actually took place in the end of 2014 into 2015, so it's quite a while ago. We haven't really had any nice trending situation going on in the euro dollar for a year now. This you can really nicely observe in the price action itself. It has been going sideways on the monthly chart for a long time. After the trend is going down, pulling away from its equilibrium state, from its balance zone, you do see it retracing. Now sometimes it shoots up to look for the air it needs to breathe, and sometimes it just goes sideways, really not doing anything, and only time will tell when this market resumes its old trend direction, or even if it turns around. But before it can turn around, you would need a fractal outside, or at least at the upper border of the balance zone, and then that needs to be hit before you can really talk about a turnaround. Now if you look at gold, that's what happened there, but in the euro dollar what you really see is candles with quite some wigs up here, and the market is going down. It's overall in a downtrend. You do have these times in this internal correction. Remember, we are talking about a minor correction. On this monthly chart, you do not have a momentum indicator going on the other side of the zero line. Instead, what's going on is these bulls trying to buy a turnaround, or buying into this correction internally, some bears getting afraid, being stopped out. But at the end of the month, these candles show you where the major market direction actually is, and only over time you will find out which of these moving averages will mark the most heavy upper resistance, simply because they all mark important levels of resistance, but we don't know which one is going to be the one that is, or that will send prices down again. If we look into this correction on the weekly chart, we can draw this black line, and this, if you observe this, and I mark this with these arrows here, with these black arrows, this line follows the highs of all of the fractals that are created internally. Now we're looking at the weekly chart before it was the monthly chart, which is the next higher time frame. This is where we see the overall trend. And if we switch down to the weekly, we can see that the correction, which was a minor correction on the monthly chart, is a major correction on the lower time frame. And this actually tells you that the market really is breathing, and we are just waiting for the next move to the downside until when this correction is done. Or to determine when the correction could be done, we are waiting until we get some fractal areas like we do here. Before all of this was created, we already saw by this candle with this huge wick that this area must be of some importance. If you look at it, it's right on top, or it's right at the blue line, the upper border of the balance zone, where prices are not able to trade above. Price is not even able to really close above it. Here and here, as well as here, it did close above the balance zone, but the next candles are always the ones turning price action around, actually towards the old trend direction, which is down. These arrows here mark the same situation, as well as here. You do not really have a price being able to penetrate this resistance here, and instead the last 2 weeks did see another turnaround, and we are still waiting for prices to come somewhere in between the balance zone or even below it, creating a down fractal, and then following through, creating a completely new move to the downside. Maybe you see people talking about the euro should be trading at around parity, maybe it should be at 0.9 or at 0.8. Maybe that's where this correction, after it's finished, will send prices to. We really have to wait, and we don't know if this correction is over now. At this point here, you could have also thought that the correction is over. You have your down fractal, you would have sold this, but then in this area you tighten up your stop as price penetrates the balance zone from the downside to the upside, and just telling you that that's not the time where prices are really breaking out to make new lows and create a new trend. As you can see at this point, there was not a lower low than on this left side right here. In trend trading, as you can see, it's extremely important to have patience and not to jump the gun. Really wait for the markets to turn, to give you the signal, and then follow these huge moves. Now, I'm always taking the weekly charts, sometimes some daily charts, to make my points in these markets. Please remember, if you are interested in trading trends, you want to make sure that you pay attention to the overall trend and not bug it. Thank you very much for listening. See you next time.